Good morning and welcome back to the Opportunistic Trader for Friday, August 24th. Glad it's a Friday. It's actually, for us here at the Opportunistic Trader, it's been a good week, but a very, very slow week. Really did about 7 or 8 trades. Was looking for stuff, had good ideas on some stuff like yesterday, long S&P, but really didn't act on it. We captured a little bit overnight on an oil trade where we bought oil at about 67, 63 and left overnight order in last night at 68 using a 67 stop if it went down, and it went through the upside of our limit. We are now out of oil. The only trade that we're still in is Apple short. We were actually up on Apple midday yesterday and the stock turned and we're down $1, $1.50. I've been in the trade all week, not loving it, but trading well around it. So we have the ability to stay in this position because we've done okay on the week. We utilize our P&L a lot to finance losing positions that we believe in. So we're still there. Today we're going to try to do some options against it. To take in a little bit of premium, increasing the price of the short, and if we get called out, then we would be profitable on that trade. Looking overnight, very quiet across the board, small upside in the Nikkei. China was slightly down, kind of flat, and going across to Europe, those markets are up very, very small. Our S&P is up. It was up about 7.5 a little bit ago. Now it's up about 5 towards the highs. The old high is in the 70 handle. So as we said yesterday, for whatever reason, they're shrugging off all news and leaking higher. In the bond sector, bonds are slightly lower. They're lower than when Gunlock came out midweek and said rates were going lower. So I don't know if he was ponying out his position or what his thought is there. Again, touching on crude, up about 80 cents on the week's high. It's a funny commodity. It's had, coming into this week, 7 or 8 down weeks from $73 or $74, and literally this week we're back almost to $69. So it's taken away at least the last 4 weeks of down. So that's a bit in an uptrend. I don't think it goes too much farther, so we would probably look to fade some rallies in here today there. The S&P will be sort of held hostage in here till 10 o'clock when Powell speaks. And, coming across the board, gold is back to 1,200. When Vince was out yesterday, and Vince is joining me today, I'm happy to have him back. Gold traded back down to 1190. It traded up to 1208. So it's been, it's been in a bit of a range here. The lows were made, I think last week. I don't remember the night, but we were all over that, and that was at like 1165 or 63 and change. So, you'd want to watch that level, but I don't think it gets there, and I would be selling above 1200 just for a trade. And the dollar, which was basically strong yesterday, has given back against the euro all of its gains. So we'll keep an eye on that. As far as straddle pricing today, which we look at every day, we're kind of mid-strike. So we'll look at the 60 strike, and straddle's pricing in about $8 to $9. But it's mid-strike, so it's actually fairly cheap from the way we look at it. We may look to do some spreading in there today, which we will keep you abreast of either pre-opening or in the chat. And then as far as oil, it is Friday, which is an expiration there. There might be some plays on that. The straddle is pricing very, very low. It's pricing at about 46 cents. We would be probably a buyer of that. And that's sort of view from the 10,000 foot level above the markets that we see. And I'm going to throw it to Vince for his insight and chat with him. Good
Good
morning.
morning. Thanks, Larry. It's good to be back. Um, Starting at the macro level, uh, just tying the trade talks. Yesterday, the dollar firmed up against all major currencies, and that was in anticipation of the trade talks failing or nothing being resolved. Let's put it that way. Nothing was resolved, and you saw the dollar continue to rally, and that took gold off with it as a proxy. And then last night, uh, the currency pairs started changing again, and the dollar started softening a little bit. At first, mixed against the yen and euro, but between 6:30 and 7 a.m., China, what I would call in a tit for tat move, said they're going to, quote, resume their counter cyclical currency activities, which is basically saying we're going to not let the yuan depreciate against the dollar. So upon doing that, their currency on the chart dropped 1%, which is basically strengthening about 1%. Right now, it's 0.85% against the U.S. dollar. So when you look at it from an hourly point of view, right, what you are looking at is to give you some perspective. Uh, in 4 hours, they gave back the currency went from 687 and a half to 683 and a half with a low of 682 and three quarters, it looks like, roughly. So it gave back all its gains back to the beginning of the 22nd, or weakness back to the 22nd. And on the back of that, what you're seeing right now is in terms of dollar moves, it's all dollar based. The yuan is stronger, so all the metals are up. Oil is up, but oil is up because oil is up. But this gives it a little bit more of a tailwind or wind that's at its back. I'm not sure what it's doing in the equity market, how that affects the equity market. I would assume that it's some sort of hopefully a bolster to Chinese equities. On the U.S. side, U.S. stocks are going to do what they're going to do. So what we have is a tit for tat thing here going on. The market likes the dollar because the trade talk failed, and China said, "Well, we're not going to have any of that," and they're strengthening their currency, not letting it depreciate too much because they need their float. They need their market to be bolstered that way. On the back of that, just some markets that I'm looking at. Quick comment on gold. Gold is indeed, as Larry said, in a trading range. We're at a higher trading range. Is it basing for higher or lower? Well, I don't know, but above 1208, we're talking always basis D's here. Above 1208, it could run to 1229. That's when I say run. Gold doesn't run; it kind of trots when it goes up. Below 1180, it could below 1180, you really do actually have to worry about that low of 1167 that you called, Larry, as being broken. But we haven't gotten near that. I think we went as low as 1189. The trade the other day that I had, we bought 1196. We took half of the position off at 1205, and then we scratched on the other half of the position. The right trade would have been, and I took half of that position off because of this phone call, this conference call that we have in the morning. But because of that trade, uh, I would have been able to buy in the 1189 area, but I don't trade that way. I will probably buy strength or buy weakness, but not at those prices. I will. You should be a seller of the range under 1208 and a buyer above 1189. Oil. Pretty much everyone is very well versed in oil here, but I'm not foreign to energy. I want to talk about natural gas for a second, very briefly, because I think it might start to get very interesting. If you look at the October contract, which has historically been a shoulder month, but also has hurricane effects, it's had a nice run up for the last couple weeks on a daily basis, and now we're in like a channel, a trading range. So there might be some nice reversion to the mean types of trades, selling rallies and buying dips. I don't know what the next big move is. I would leave that to people who have a strong opinion on the reports. But it looks like we have a nice little range here you can capture if you know what you're doing. But we're stabilized at higher levels. For me, the only outlier I think that might be important going into the weekend after Powell talks, right? Because people are going to be focusing on Powell today, as Larry said, is Jackson Hole has been a non-event for the last couple of years. Uh, I think if you look at the bond market, the twos and tens are very flat historically, as flat as they've been for years. And you're going into, I think, Jackson Hole with it being a non-event. If they say anything that is, I think, perceived as even tighter, then they could inadvertently, I don't think they want to, inadvertently move the yield curve towards almost inverting, and that would be recessionary. I know in the past the Fed has said things like under Yellen, we'd rather raise than lower because we want to have those bullets in our pocket to lower if we have to. When you look at the S&P at these highs, and you look at the economy as on paper doing better than people expected it to do, I would not be surprised if after Powell does whatever he does over the weekend, something happens that is perceived as too aggressively tightening, and we have a washout Monday or Tuesday. That's my. It's not a black swan because I can identify it. That's my brown swan. I'll throw that back to you and get what you feel on that.
I don't see that. I'm hoping that obviously for us at the Opportunistic Trader that would be great because when the landscape gets a little bit tough, we're able to make money and navigate the landscape. So I'm hoping for, as you would say, a brown swan, but I'm not expecting much. They had Bullard on this morning, who is not a voting member of the Fed, talking about not raising again for the rest of the year, and he doesn't see inflation and whatever. So I think by Trump rattling feathers, it's put a little bit of a problem into the Fed, even though obviously the Fed, quote unquote, operates indirectly or doesn't take advice, or actually no one's ever really gone publicly and ripped the Fed before. So,
but how could you not be affected by Trump opening his mouth, even if you're the Fed? You know what I mean? It just makes you want to do something.
I just wanted to, just a talking point, or I would call a laughing point. Yesterday, Trump came out sort of midday and he made a comment that if he gets impeached that people are going to be very, very poor. So it actually it's comical. The one thing that to me is not comical is the market is in this mode of what I call denial, where it basically doesn't believe anything and nobody wants to sell. We had the freak out in February basis the volatility trades, but overall, we're in that same mantra. Nobody wants to sell. But again, I'm going to point to this because I've seen it all week, and I think it's important for our viewers and members out there to realize is every single day this week and most of last week, the imbalances on the close were very large relative to the amount of volume that is going on in the marketplace for sale. They've come paired off at the end of the day or more paired off, but every day it's been showing over $1 billion for sale. So I don't know if they're big funds, mutual funds or vanilla longs or whatever getting out, but it seems to me that quietly people are liquidating positions in here, and I'm expecting in the later third quarter and into the fourth quarter to get heavy volatility, and especially coming in to the election. I think he's gonna suffer large defeats, and I think it changes the complexion of how they how they look at it. But, as far as Trump, it used to mean more, I think, when he opened his mouth. But now we actually did sell off of those comments, but then rallied back. So we're about, we're less than 1% from the high on a closing basis. We're probably under 0.5% from the high. We did trade over the high early this week, Monday, Tuesday. So on the S&P, I would be not a seller really in this level. If it gets up a bit higher, maybe sell against the old high to see if we don't get a closing high. But the bias is probably a bit to the long side. Bonds are a bit interesting. They've come significantly off the lows. Yields were about 3%. Now they're at 280-ish. So it'll be an interesting day, I think, from that perspective. I think you might see more of a move there. But, on my front, I don't expect a lot from Powell. He's, it's really his first Jackson Hole. I don't think he wants to be market moving. Pricing of options, which always is important to us here, are because if the market believed that there was something going on, then they would have bids and all these options, and it's not really the case right now. So, I'm not expecting much, and overall, out there, I don't see a ton of trades for us. It's been a slow week. We've done, like I said, 7 or 8 trades. There were days last week, that we had 12 trades in a day. So, again, hence the reason for the name Opportunistic Trader is that we want to wait for opportunities here that look good. And as Mark Fisher always says, you don't have to trade every second. You can wait to see the bull really big, and that's what we're going to try to do here. One trade or one thing that I'd like to talk about, and I'd like to include you in your thoughts, is one of my best longer-term trades here, and I'm not exactly sure the perfect way to play it. I mean, the generic way to play it is through FXI, but I really think China is a buy here. Markets are down 20%. It's counterintuitive to what's going on, but I just think that they're going to do something, and it's the type of market that if you get some kind of really positive news, you could have a 5 to 10% rally in that market very, very quickly. And it's not coming tomorrow, but it may come when something comes out of the blue on a more positive side. So, I don't know what your thoughts are on China, but, that for me, and it's not a trade that I'm looking at today, but that to me is a trade that I am long in my personal account, and, I'm going to sit in that trade for a bit.
My comment on China is probably the comment you would have had, you would have heard had someone been talking about the United States 100 years ago. Basically, you have a country 100 years ago that went through a civil war. You got a Great Depression coming up, and everyone's looking for reasons to say why that stock market isn't a buy or why it's not going to go up. Look, we're looking at an ocean, a sea change, and everything that is, even if the Chinese as a government do things wrong, you have an economy that's just got its own life. And if you were to be a 5 to 10 year holder, just based on demographics alone, you would be rotating out of United States stocks into Chinese stocks. Of course, there's always the risk of nationalization and stuff like that, but I think they've come too far to go back to that. So from a really, really, as you say, 10,000 feet above through the clouds, if you got a 5-year-old kid and you're going to put money in stocks, if I had to put on an ARB, it would be short U.S., long China. I say that because it's their turn. Our middle class, our baby boomers are retiring. How long the Fed can keep the market higher, that's my opinion. I don't know. How long the fundamentals can be ignored, I don't know. How long can the fundamentals be ignored over in China? I don't know. But you have a growing, burgeoning, newborn middle class over there with money to spend. And they're going to end up being steered from things like gold to things like equities once they get educated financially. So the secular, macro, and fundamental trends are to be long Chinese equities if you have a 10-year time horizon. And you can ignore the things that smart money did in, I guess, the 1900s to the U.S. On that note, closely related, for the last 2 months, we have seen the dollar and the yuan be the most important currency pairing. So if you're looking at the dollar, we would always look at the euro and the yen. But this trade war or tariff war has brought it all about the yuan versus US dollar. Now, as you know, Greg and other guys on the currency side will tell you in more detail, it looks like that when this trade war is over, let's assume that it's over right now, I think that the connection between the Chinese currency and the US dollar will not go away. And if you believe that a currency for a country is basically its stock price, it's the strength of the currency is the stock of the country. Well, then you believe that 10 years from now, the US dollar will be lower and relative to the yuan. And I believe that that will be the case as we become an exporting country, net, and they become more of a manufacturing country, and their currency becomes more of a competitor as a store of value. And it's not going to happen overnight. The dollar's not dying. But yeah, I do feel strongly about that. And in fact, I do have some 529 money in Chinese equities for my kids. It's a fund. I'm not really sure what it's probably based on the CNI. I'm not sure. But I do think that when you look at things like what Larry said, what you just said, Larry, every day we get near the highs, there's small, well, relatively speaking, small stock to be sold in the U.S. That's people slowly getting out. And I would be willing to bet that there's $2 billion to be bought on the lows every day, in the Chinese market. So for what it's worth, that's what I see, and I hope that adds some value to what you're talking about.
I will add the caveat that if we had that spread on early this year, we'd be blown to
exactly.
So,
you can't do it on margin. You got to put it in an account. You have to ignore your account.
I'm looking at this just because the market is down 20%, and I'm not even equating it to the U.S. I'm not even getting that, that theoretic.
I'm not saying that it would be an ARB. I'm just saying if you had to ARB it, are you going to put your money in U.S. stocks for the next 20 years? Or are you going to put your money in Chinese stocks? Well, okay.
I don't know. They always say don't bet against the U.S., so I'm not making that bet. But I am just looking at that one market as an opportunity for the kind of stuff that I do, especially on a longer-term basis. And, the hardest thing to do is sit through a little bit of the choppy or the pain. But, down at these levels, FXI is the way I'm playing it, and that's their large cap stock, so it's the Alibaba type. So it's their, it would be buying, Hong Kong and China, large cap stocks. So that, they're not companies that are second and third tier that may go out of business. But,
right.
Looking back at the markets here, there's not really much movement. We're waiting on the 10 o'clock Powell. I don't expect much. We have durable goods at 8:30, not really a market mover. Today at the Opportunistic Trader, we're happy to have Matt Atman. He is an institutional investor. He looks at the way institutional investors invest, where fund flows are going. He has his pulse on, hedge fund of funds, and capital allocation. So it'll be interesting to see where the money flows are going on the higher end investments. Happy to have him. And as always, we have Rajan, who is our markets coach, has 30 years of experience in the trading business and now basically advises to traders, with mental thoughts and how to make people understand the psychology of markets and how to mentally handle movement. I probably need to be in the call after a long week this week. For me, I like to make 5 to 10 trades a day. I'm just trying to sit on my hands here. It's worked out well for us. We've parsed out a few good opportunities, and we'll again wait here today. We'll probably come up with some vanilla spreads for our members to look at what we're doing, and hopefully everybody has a good day, and we should be back to you before the opening with trade thoughts and what changes have occurred in the market. Any closing thoughts for the week, Vince?
Well, quick question, because I do believe we're going to have, going into Jackson Hole, especially after China making those, actually 2 announcements. One was about their currency, and another is about their controls in their markets. I got to think there's going to be some red herrings before Jackson Hole, where some Fed people will talk, and maybe they'll uh, throw out some words to see how the market reacts. One of the members I think just mentioned that Mester and is going to be on CNBC in a couple minutes. Kaplan spoke last night. So although we may not have violent moves, we may have some moves in the markets going into Jackson Hole as the Fed tries to feel out how the market will react to certain words. So my question to you is, what is a new trade that you are looking at if X happens today? If the market moves, what's the one trade you would be looking to do as you're sitting on your hands today? That's when
Um,
you're ready.
you know what? I don't really have anything. I'm going to wait for the market sort of to develop. I'd like
Right.
to be buying some dips in the low 68 handle in crude. And again, I don't mind selling it up near the 69. So just trading crude and, listen, I don't see really much moving the market. The equity markets have ignored, all the moves out of Asia, all the moves out of Europe. It's marching higher. Next week is the week before the summer ends, and traditionally that is always an up week. So I don't expect much. But as you said, I'm not saying a black swan or a brown swan or even a gray swan. I don't expect that, but we want to have powder dry. There's not a lot going on. Looking at the equities, all the FANG stocks are up anywhere from 40 basis points to a percent or two. That's not really too much of a move. Most of the FANGs are up like 40 basis points, and we look at those stocks every day to give us an idea of market movement and which one is weak versus the market. And I will give a shout out or props to the equity trading room. Has done an excellent job of parsing out the news, giving great thoughts on markets and trades that they are doing, both from our experts in the space as well as people that are actually providing information in our chat room. So I really am happy with what is going on in the equity chat room. So I would, keep an eye in there, and a lot of good ideas are floating around, and I'm watching that as well. Stock is not my forte. I do trade equities pretty much every day. But we have some really, really good people in there, and I'm very happy with what's going on there. And any other thoughts, Vince?
Yeah, to that point, on the equity side, I'm an indice type of trader as well. But when you have guys in there that know a company, know a stock, have a feel for Google, and they make a comment, I'll pay attention because I'm learning as well. On the equity side, I had a signal that did say it's a multi-day signal. I don't know where your patience is on this, but it says below, unless we make new highs, 1208 to 1210 is now an area that's not a problem reaching. And if you're a technician and you're looking at like a 4-hour chart, you'll also see what I'm saying in terms of a wedge. We're in a wedge that can either be a bull flag or collapse lower, but we are in a wedge that's going to break out relatively soon. The one trade I am looking at in the area that I'm supposed to know, gold, is I'm looking at gold to sell it under 1205 if I'm trading the range in the 1205, 1207 area. So I would be seller at 1205 potentially, and a buyer at 1208 to close on a stop. If the market were to dip, I would be lightly buying in the 1193 area with a stop out at 1189. Now, 1189 is probably a better buy level, but just know that below 1189, it could skate to 1180. So on my radar, I'm trading the range in gold lightly, especially with all these Fed people out there, and volumes are going to be light as people go into the weekend. And I do view Friday as a upside down day. And I know that there's shorts in gold that probably threw back into the market yesterday that may cover today on the close going into the weekend. So That's it. I'm going to trade lightly and be out of my positions before 3 p.m. That's where I am.
Great. If I don't speak to you, have a nice weekend. I definitely will see you in the chat for sure. But if we don't
Yes.
talk, have a nice weekend. And I will be in the chat and, back at you at some point later today. Everybody.
And maybe we'll meet in therapy in the traders therapy.
Exactly. I definitely need that. That's a good weekend there. Rajan will boost me back up. So,
Exactly.
I'm happy that he's with us, and I think it's very, very important. And what I'm trying to do here is provide a trader or investor or someone that even runs a fund an opportunity to get information, education, and give them the full service product that I would want, if I was, in their shoes.
Absolutely. Thank you, Larry.
All right. Have a great one.